Goldman IB revenue up 88 is going to make Morgan Stanley's stellar number look soft.
Yeah, they've done in the first 3 quarters better than any year that Goldman has had in the history of the firm. We're talking about some incredible. They beat top line 16%. How about this? Bottom line 48%. I'm calling this a drop the mic quarter for Steve Scher, who is now retiring.
He's the CFO, obviously.
Well,
a long-time CFO.
It's kind of like Scher. You don't have to name who he is.
Many of our viewers have no idea who he is. No offense to him. Yeah, they don't.
Oh, that's his legacy? The unknown CFO?
I don't think he cares that much.
Not at all.
Whether
He cares about the money.
Yeah.
And when you speak to him, it's very clear he makes the point that I'm an idiot that I ever left because I could be a rich man.
Nobody's complaining.
Okay.
You should
I'm doing
not
the
be.
bottle
You
dance,
should not be complaining.
I'm doing the bottle
Nobody's
dance.
holding a fundraiser for you, my friend. All right, get back to the numbers, Ted.
Okay.
Yeah.
Look, a lot of it is M&A, okay, which could be episodic because we know we got a new FTC chairperson.
We do, although I mean on M&A there is a lot of activity at a not lower level, but at a level that pays very high fees, but is not necessarily something we talk about that often. It's not headline deals.
Yeah, that's a really good point.
Those kinds of deals you are not likely to see in this current regulatory environment, whether it's at the FTC or the DOJ. There is an expectation that you're going to be met with significant opposition potentially, where you announce some sort of strategic kind of a deal.
No,
we'll see.
Right.
Nobody's even tried. That said, M&A is very strong.
Asset management, which we know is sticky. Talk about taking in $90 billion. I thought that was great. Now, here's something that we don't talk about enough. The Apple Card. They have 7 million customers. Now, I know you could say they should have double that. But people told me they're going to be losing a couple billion on this. No. It's containable, and I think it's exciting. They've turned it back on. So, you've got a company that if you believe that traders are that good and they're that lean, then you could argue that this company deserves, I don't know, I could say it could go to 500 without.
Wow. It does set up an interesting debate today because RBC does cut Morgan Stanley, and their argument is in a raising rate environment, you're going to want the commercial banks.
Yeah, but you see, that's the old way of looking at things. Look, I like him, Cassie. I like RBC. I've known him for years. But what's happened this quarter is, and the reason why these things are up, is that the banks have really kind of disengaged from the notion, David, you can say, of this yield curve. Morgan Stanley is an asset gatherer, okay? Bank of America has lots of different fees that are very sticky. I look at this Goldman number and I say to myself, you know what? It is now no longer episodic trading. It's just ingrained. And the yield curve, that's a very backward way of looking at these.
It may be. Yeah.
I really believe that.
Although we're moving in the right direction, we would be citing it as a potential positive for net interest income at the big banks.
I'm saying that look how much money they make, all of them, right now. And Morgan Stanley, we spoke to James Gorman.
We did.
The price earnings multiple has gone up. But I love a business where, we used to say, oh, boy, the assets go out the door every day. They don't. That's another canard. There are a lot of canards that have been busted by this quarter.
Well, at Goldman, they may still, and at Morgan Stanley to a certain extent. Don't forget, capital markets was very strong for Morgan Stanley, as it is, of course, within investment banking. But
you're not buying my thesis that it's not. We're not talking about yield curve.
I mean, they still do go. Of course, these days nobody goes in and out of the building. They go in and out of their bedroom. Well,
that's a good point.
Thank you. Yeah, but no, they do come in at Goldman and Morgan Stanley actually. But it's still important. It's still very important to both their businesses. Even at Morgan Stanley, it moved the needle a lot in terms of their performance, particularly in equities.
But there's a step function that's so much greater than what the analysts are looking at that I don't think that we can talk about beat the estimates. This is not a beat the estimates quarter. What this is analysts, you better start thinking of these banks in a different way because they're not doing what you're thinking. They're making fortunes they've all figured out ways to make money away from the yield curve just in case we don't raise rates.
Right.
Did you just yawn?
No, I didn't yawn. That actually was not a yawn.
Yeah, no, that was he yawns at other stuff, but not that.
Thank you.
I was at the game last night. Well, you might have been yawning because of the check swing.
Oh, that's Wilmer too. That was Wilmer, an old Met. That was
check swing.
There's a lot of outrage today.
There is
about the need for robots at the plate.
Yeah.
Yes.
Wow. AI, metaverse.
Game 5, arguably the two best teams in baseball.
Shepard Smith here. Thanks for watching CNBC on YouTube.